1st of April 2002 with effect from assessment year 3-4 onwards. So basically, why 50C, why was 50C introduced? Based on the certain experiences the department had with the assessors at that time, way back in 2002. And based on their experiences they had with the taxpayers regarding the sale and purchase of real property, 50C was introduced in the statute with effect from 1st April 2002. That is effective assessment year 3-4 onwards. That is Finance Act 2002. What is 50C basically? 50C basically, what was the background is large scale undervaluation of all the sale consideration and unaccounted money in the real estate transactions. That was the basic, underlying theory for introduction of 50C. Now, let us come to the section. Now, all of you are well versed with 50C. It is there in the statute from past 20-22 years. But now we will try to go through the issues and also try to interpret, bisect the section, full stop, comma interpretation. As and when you have a doubt, I will readily and gladly take the queries. So 50C1, the section starts like this. Where the consideration received or accruing as a result of transfer by an assessee of a capital asset, okay, being land, building or both. First we'll go through the section, then we'll bisect and dissect it. So consideration is received or accruing as a result of transfer by an assessee of a capital asset, being land, building or both, which is less than value adopted or assessed or assessable by any authority of the state government, that is the stamp valuation authority, for the purpose of payment of stamp duty in respect of such transfer, the value so adopted or assessed shall, for the purpose of 48, be deemed to be full value of consideration received or accruing as a result of such transfer. So what is it, ladies and gentlemen? Consideration is received for what? For transfer. What is transfer? Transfer is defined in 2 within bracket 47. Transfer includes sale, exchange, relinquishment, extinguishment, etc., etc. Then even 247.5, part performance of contract, or 47.6 is, that cooperative society, etc. So part performance of a contract, read with section 53 of Transfer of Property Act 1882. So in that context, we discussed through Supreme Court judgments also. If the joint development agreement is unregistered, then it will not have, it does not amount to transfer. You cannot apply 247.5 read with Transfer of Property Act 1882. Why? Long back amendment came in 2001. As per section 17 1A 49 of Indian Registration Act 1908, joint development agreement has to be necessarily registered. Amendment came way back in September 2001. Anyway, so the transfer wide meaning within 2 within bracket 47 of a capital asset. What is the transfer, sir? Transfer of a capital asset. Meaning what? What is the capital asset? 2 within bracket 14. Capital asset includes any and every damn right on this earth. But excluding, what does it exclude? For example, 214 within bracket 3, clause A, clause B. What is clause A, clause B? It is a rural agricultural land. There are 2 types of rural agricultural land. One within the jurisdiction and whose population is less than 10,000. One outside the jurisdiction up to 2 kilometers, up to 6 kilometers, up to 8 kilometers. Population 10,000 to 1 lakh, 1 lakh to 10 lakhs, more than 10 lakhs. And how to measure? Aerially measured. So earlier we used to say strictly as a crow flies, nothing doing now. It's only aerially measured. So basically, capital asset means what? It includes every damn asset on this earth. You know that definition, 2 within bracket 14. Other than A, B, C, D, there are some exceptions. For example, personal effects. What are personal effects? Motor car, personal effect. Example. And then, this agriculture land, etc. That's it. Being a land or building or both, what should be the capital asset which is coming under 50C? So here, 50C, what will apply, sir? Capital asset definition we saw, exclusion we saw. But for the purpose of 50C, capital asset means only land or building or both. Understand carefully. That means this section does not apply to tenancy rights, leasehold rights, booking rights, PDRs, development rights, etc., etc. You will see those cases also. So clearly it says capital asset means land or building or both. Okay. It does not include rights in land and building. It does not include, sale agreement transactions, does not include leasehold rights, does not include booking rights, does not include tenancy rates, etc., etc. So, is less than, they are telling the transfer value is less than value adopted or assessed by authority of state government. Meaning to say what? Value adopted, assessed, no problem. What is assessable? What is the word assessable? Assessable means all your, for example, it is a sale agreement, then it become a sale deed. Authority of the state government, not central government. Authority of the state government, not central government. So authority of the state government is stamp valuation authority. For purpose of payment of stamp duty, they are necessarily telling you have transferred a capital asset for a consideration less than stamp duty authority, less than the value determined by stamp valuation authority. Matrons. Therefore, what will happen? The value so assessed or adopted or assessable shall, for the purpose of 48, be deemed to be the full value of consideration as determined by the stamp valuation authority. That is the basic section. What is the first proviso? So this first proviso is inserted with effect from 1417 by Finance Act 2016. Now understand carefully various issues also, and you have any question you ask, don't worry. What is first proviso? Effective from 1st April 16, Finance Act 16, effective from 1st April 17, assessment year 17 onwards. Now, if I were to enter into a sale agreement with Mr. Chetan for purchase of property, understand carefully. I entered into an agreement with Chetan on 1st of April 18, very good, for purchase of property at Padmanath Nagar. So, as on the date, the stamp duty guideline value was 1 crore. 1st of April 18, I entered into a sale agreement for purchase of property with Mr. Chetan. As on that date, the stamp duty guideline value is 1 crore. Sale deed is executed on, say, September 20. In September 2020, sale deed executed for 2 crores. So 1 crore is the agreement value. 2 crore is the sale deed value. I mean stamp duty value basically. Stamp duty value as on 18 was 1 crore. Stamp duty value as on September 2020 was 2 crore. So what is the sale consideration? Sale consideration was only 1 crore only. Okay. Sale consideration is 1 crore only. That stamp duty guideline value was 2 crores. So I gave advance to Chetan in terms of agreement. Say I gave 1.5 lakhs advance I gave. So there are 3 figures, ladies and gentlemen. Please understand carefully. 1st of April 18, there is an agreement. And on that date, I gave 1.5 lakhs advance. On that date, guideline value was 1 crore. Ultimately, the sale agreement was executed and sale deed was executed in September 2020 when the consideration is fixed is 1 crore only, but guideline value was 2 crores. So now what has happened? I am going to invoke first proviso. Date of agreement fixing the date of consideration and date of registration are not the same. Date of agreement and date of registration are not the same. So value so adopted or assessed by the stamp valuation authority on the date of agreement only may be taken to compute. But first proviso is subject to second proviso. When first proviso is telling date of agreement and first proviso is telling the date of agreement fixing the amount of consideration and date of registration are not the same. So which value to take, sir? Value adopted or assessed by stamp valuation authority on the date of agreement may be taken for the purposes of. That is the word assessable here. That is why it is because it is sale agreement. Now the question therefore is, I will take only 1 crore. But first proviso is subject to second proviso. What is second proviso telling? Second proviso is telling, my dear purchaser, my dear seller, when you have entered into agreement, the seller should have received or purchaser should have given on or before the date of agreement. Please understand, I am telling you, repeating you, on or before the date of agreement, some amount of consideration or part thereof other than cash. So second proviso is telling the first proviso would apply only in a case where some amount of consideration or part thereof has been received by any mode other than cash. But what are the date? On or before the date of agreement for transfer. I'll repeat again, then we'll go into the issues. So what is first proviso? Inserted by Finance Act 16 with effect from 1st April 17. Date of agreement fixing the date of fixing the amount of consideration, date of registration are not the same. Therefore, the first proviso is telling, I will take the value adopted by stamp valuation authority on the date of agreement. Subject to what? Second proviso. Subject to what? Any part of the consideration, any portion of the consideration shall be received other than cash. That means in any mode other than cash. It may be check, it may be your Paytm, etc., demand draft, etc., other than cash on or before the date of agreement. Now we are all consultants. What is our job? Break up issues, remove the loophole. First loophole. Section is telling, my dear friends, provided that where the date of agreement, nowhere it's called sale agreement. Don't tell me sale agreement, all of you. As I read this section is telling date of agreement fixing the amount of consideration. There should be an agreement between me and Chetan, not necessarily sale agreement. Where is the word sale agreement used? Where is the word sale agreement used? There should be agreement. See, why this provision has come into the statute, first of all? Why this amendment is made? Because of backdating. Else what I would have done, I know Chetan well. So actually we entered into sale deed only in September 2021. Stamp duty guideline value was 2 crores. So we got an idea, 1st April 18, guideline value was only 1 crore. So therefore, if you are done backdating, antedating, make one agreement simply, backdating, antedating, make one agreement, and then you will tell agreement is there, sir. So I'll go back as on 1st of April 18 only. It is not possible, sir. Section itself, proviso is brought. It is not antedating or not backdating. Now the problem is, this is an agreement, okay? It's a registered agreement, I am telling you. This agreement need not be adjusted. Second point, this agreement need not be adjusted. Only thing is what? Amount should have been received by banking channel. So if the amount is received through banking channel, where is the question of me backdating or antedating the agreement? Number 3, should the agreement be registered or not? Not required. Agreement need not be registered. Nowhere the statute says agreement should be registered. Number 4, I am telling you, I entered into an agreement with Chetan. I registered the agreement, sir, on 1st April 18. Understand carefully, listen carefully. I registered on 1st April 18, but I gave in cash 1.5 lakhs. What is wrong? Is there scope for me to do backdating, antedating? Because the agreement is registered. Sale consideration fixed 1 crore. As on 1st April 18, sale consideration fixed 1 crore. Guideline value became 2 crores in September 2025. But I cannot cheat the government here. No, I cannot cheat the stamp valuation authorities. I have registered the agreement. I paid stamp duty. Agreement registered, but I paid cash. What is wrong? So in my opinion also, tribunal will get the relief. Number 4 issue. Suppose agreement is registered or agreement is not registered. On or before the date of agreement, no. 18, I entered into agreement with Chetan. 1st of April. June, I paid by check. What is there? It is not on or before the date of agreement. Agreement again in April 18. Consideration paid to Chetan in June. It is by account by check only. Ultimately, sale deed executed in September 2020. So in this also you are telling antedating, backdating. So April you don't take, sir. My humble opinion before the members judges, you take it as on June 18. So what if it's not written in the agreement? But amount has gone through banking channel. I cannot antedate or backdate the agreement. In my humble opinion, this also will be allowed before the High Court, will be allowed before the tribunal. Agreement need not be registered, I repeat again. And also, May, agreement is registered or not registered. I entered into agreement in May. But on or before the date of agreement, I have not paid any amount. I didn't pay a single penny to Chetan. But I paid him 1.5 lakhs. I paid him by check in June. So what is wrong? You please take the stamp duty guideline value as on June. Is my intention to antedate or backdate the agreement? No. So in my opinion, all this will stand the test of law. Again, now, where the amount of consideration or part thereof has been received by an account pay, check, account pay, bank draft, or by use of electronic clearing system. So that electronic clearing system and such other mode of electronic mode that is applicable with effect from 1st April 20, like your credit card, etc. What else is there? Paytm, Google, UPI, all. On or before the date of agreement for transfer. Here the word used is agreement for transfer. Nowhere is using the word sale agreement, so be crystal clear. That takes care of first proviso and second proviso. Before I move further, ladies and gentlemen, any questions on first proviso and second proviso? Please tell me. Don't worry. Any question on 50C, till now what we discussed? I will not take any question on the next provisos. Up till now you have any question, you let me know. We'll move further, sir. Then you ask, don't worry, whenever you have doubt. Now what is the third proviso? Third proviso says, provided where the value adopted, assessed or assessable by the stamp valuation authority does not exceed 110%. It was earlier 5 by Finance Act 2020 with effect from 21. 110% now of the consideration accruing or received as a result of transfer, the consideration so received or accruing shall for the purpose of 48 be deemed to be full value of consideration. So now they are telling that 110% you have to calculate based on what? It's based on actual sale consideration, not of the stamp duty valuation. Yes, it is only on actual sale consideration, not on the stamp duty value. So if less than 110%, they are telling okay, 10% will ignore. More than 110%, so difference is said 20% means it is not possible, sir. They'll ignore. They'll not ignore. Now 50C2. Then we will see the issues also. Don't worry. Now 50C2. What is 50C2? Assessee makes a claim before the AO. Now what has happened? Understand carefully. I entered into sale deed with Mr. Chetan. Our agreement first what? It was 1 crore. It became 2 crores. So example, I entered into sale deed with Chetan and 2 crores it is. So I told the assessing officer, no sir, 2 crores is not the 2 crores is only the stamp valuation. But the fair market value of this property is 1.5 crores only. It is not 2 crores. Why? There is a school beside that. A lot of my students, they are playing and shouting and dancing, howling. School is there, or high tension electric wires are going on, or there is a mori or nala there, whatever. Garbage is there. So because of that, according to me, the fair market value is only 1.5.
1 minute. Naveen, can you keep the mic a little near? Naveenji? Yeah, can you keep the mic a little near?
Yeah. It is near, sir, now. Can you hear, sir?
Yeah, you have to increase the volume. Vinay?
Increase, sir.
Yeah. Now it's clear. Yeah.
Yes, sir. So in this, what it says 50C2, suppose I entered into a sale deed with Chetan where guideline value is 2 crores. According to me, the FMV is only 1.5 crores. So what to do? Because I told you various reasons. Because of various reasons, like school in the vicinity, there is garbage in the vicinity, high tension electric wires or something like this. So, or you have a neighbor who is always quarreling. They know this fellow always is quarreling, neighbor. So, therefore, I have to make a claim. The assessee has to make a claim before any assessing officer. So 50C2 is telling the assessee makes a claim before the AO that the value adopted, assessed or assessable by the stamp valuation authority, the 2 crores, exceed the fair market value as on the date of transfer. What is the fair market value? 1.5 crores. So you guys have to make a claim. Question is assessee claims before AO. Where we are, sir, now? This is income tax law. Now come to practice. Law, practice. What is practice? It is faceless assessment now. Where shall I file my claim? Shall I go before the JAO or shall I go online faceless? Whom to make claim? So according to me, I don't know who is my faceless officer unless it is taken up for scrutiny. I'll have to appear necessarily before the JAO and make a claim. Then JAO will decide. He may, put the case in faceless. And they may decide then. Or JAO only will refer it. Next. So I made a claim before the assessing officer, disputing the stamp valuation, which is stamp valuation, which is of the authority, determined by the authority. Then B is telling the value so adopted or assessed by the stamp valuation authority under subsection 1. There is one more condition. My claim, I can make a claim only if the value so adopted or assessed by the stamp valuation authority, that is 2 crores, has not been disputed in any appeal or revision, or reference has been made, or no reference has been made before any authority, any other authority, court or high court. So I want to make a claim. Yes, sir. Telling what? Sir, guideline value is though 2 crores, fair market value is only 1.5 crores. So I will make a claim before the assessing officer. What is the claim? File a letter, write a letter. Then he is telling assessing officer when you can file a claim, only if you have not disputed such fair market value or such stamp duty valuation. You are not disputed that in any appeal or revision, or no reference has been made before any authority, court or high court. Then the law is telling the assessing officer may refer the valuation of capital asset to a valuation officer. So the AO may refer the valuation of capital asset to a valuation officer. So I am telling it is not 2 crores. It is only 1.5 crores. I made a claim before the assessing officer. So law is telling, the section is telling AO may refer. AO may refer the valuation of capital asset to valuation officer. There are case laws which are telling in such circumstances, upon fulfillment of the conditions, the word may will be replaced by the word shall. AO shall make a reference to the valuation to the of capital asset to the valuation officer. We'll see that case laws also. So don't think AO may refer. He cannot blackmail you. You have to tell him, sir, I have made a claim. Yes, that 1.5 crores is the fair market value. It is the correct value, not 2 crores. And I have fulfilled the condition. What is the condition? I have not disputed this value in appeal or revision or any reference before any authority court or high court. Therefore, the assessing officer is duty bound to refer the valuation of capital asset to valuation officer. Case laws are telling the word may will be replaced by the word shall. It becomes mandatory upon the AO to refer the case to a valuation officer. Then what is and where such reference is made, all the powers of Wealth Tax Act will apply to the valuation officer with necessary modifications. Okay. Now wealth tax, how I wish the wealth tax comes back again. Why? They are very difficult for me to declare the gold, silver, diamond, precious stone, etc. declared by the assessee. We don't know. So there is an assessee now. He's married for say 25-30 years. Based on Indian customs, traditions, Hindu culture, etc. They would accumulate some gold, silver, diamonds, etc. So, over a period of time, say on marriage, say, on creation of HF, betrothal ceremony, birth of children, various functions in the family, engagement, etc. So, a lot of gold, silver, diamonds, etc. precious stones accumulated. Therefore, how do you show, sir, all these and so many gifts and ancestral property? Earlier, wealth tax was there, which Jaitley deleted with effect from 1st of June 15. Wealth tax was abolished from the statute. So earlier, what we used to say, sir, declared in wealth tax, so that much gold at least was declared. Now there is no way out. How to declare? Either I should have filled up in the schedule AL now of my return. That too, can I fill up only quantity or even I have to fill up the figures there? Or only quantity can I fill up and upload? Only figures, even quantity I can't fill up. Tomorrow they'll ask me what is the source. If I can't prove the source, they will tell 69 matrons. So this is the problem. Very well. Valuation officer shall have all the powers of the wealth tax officer as was then applicable. Next. So the explanation 1 is giving valuation officer shall have the same meaning given as per section 2 clause R. 2 clause R as per the Wealth Tax Act 57. Then now, so we will see that examples also when that may is become shall. Next 50C3. 50C3 is very simple, sir. I referred my case, myself, Chetan, 2 crores, 1.5 crores. Fair market value, 1.5 crores, guideline value, 2 crores. So, I went to AO, I made a claim before AO referred to valuation officer. Now, valuation officer is Kamlesh. So, Kamlesh, what can I do? Either he will determine a value in excess of 1.5 crores or less than 1.5 crores or accept 1.5 crores. Only 3 things he can do, sir. If he accepts 1.5 crores, I am very happy. Our Kamlesh valuation officer accept 1.5 crores. I am very happy, fair market value. Or he will tell more than 1.5 crores, he will tell it is 1.8 crores. Section is telling no question. Value, ascertain and subsection or Kamlesh metal less than, normally nobody will go less than 1.5 crores. So 50C is thrilling and assessing officer value is 2 crores. Where the value ascertain and subsection 2, that is your valuation officer, exceeds the value adopted or assessed by stamp valuation authority, 2 crores. Suppose Kamlesh makes it 2.2 crores. Value so adopted or assessed by such authority shall be taken as the full value of consideration. That means what? You ignore Kamlesh value of 2.2 crores. You please take the value of 2 crores only. They are telling don't worry. Guideline value is 2 crores. Our valuation officer Kamlesh is saying 2.2 crores. You are telling FMV 1.5 crores. They are telling no. I will not take 2.2 crores. I will take 2 crores only. Value so adopted assessed by such authority. Next. Where is that? Yeah. 50C3 is done. The salient features we need not worry, sir. Next. Yeah, this is what I wanted to tell you. On receipt of valuation report from valuation officer, assessing officer has to compare the fair market value as determined by the VO with the valuation done by stamp authorities and with apparent sale consideration, which is shown by assessing sale deed. where the valuation done by VO is more than the valuation done by SVA, Stamp Valuation Authority. So VO is 2.2 crores, done by the Stamp Valuation 2 crores. Then valuation done by SV only, that is Stamp Valuation Authority, would take as full value of consideration. So Kamlesh, valuation officer, has done 2.2, whereas Stamp Valuation Authority is telling only 2. So therefore follow the valuation done by SVA, Stamp Valuation Authority. If the valuation done by VO, that is valuation officer, less than valuation done by SVA, that is Stamp Valuation Authorities, then the valuation done by Stamp Valuation Officer only. That means he made 1.8, Kamlesh, instead of 2. That means the valuation done by VO, Valuation Officer, Kamlesh, would be adopted as full value of consideration, as against the apparent consideration shown by SSC or the valuation done by SVA and capital gains we accorded calculated. No problem. If the valuation done by VO is less than the valuation done by SVA, as well as the sale consideration shown by SSC in the sale deed, then apparent consideration shown in sale deed would alone be accepted. Here you cannot escape, because valuation done by VO is less than valuation done by SVA, as well as the sale consideration done by SSC in the sale deed. Then it's telling restrict yourself to the sale deed consideration as per actual sale consideration received as per sale deed alone. Use of the word shall in 50C makes it mandatory for AO to adopt the valuation done by SVA in place of apparent consideration if necessary conditions under 50C are satisfied. Assessing officer has no discretion. Now, this constitution validity, already you know, Madras High Court in Palaniswamy and others, Bombay High Court, Bhatia Nagar, they have upheld the constitution validity of 50C. We discussed provisions of 50C do not apply to rights in land and building. It does not apply to does not apply to development agreements, does not apply to land development rights. And therefore, if you see here, this Soumya Satan, not applicable to land development rights, ITET, Bangalore bench. What is it telling? Section 50C shows legislature was conscious about the proper expression to be used as per its intention, scope, object and purpose, where it has been expressly mentioned that capital asset should be land, building or both. It has not been mentioned that any type of rights also shall be included in definition of capital asset. Okay? Because, for example, you know, in the definition of 269 UA or in section 269A, that immobile property has been defined. In that, if you see, in the explanation, they say land, building, part of building and other things including right therein. So, any rights of the nature referred, they are telling them. So, wherever the legislature intended to include rights, they themselves specifically tell including rights. Here, nowhere rights are included. Only it says land or building or both. Similarly, in 216 UA also, they are telling rights in land and building have been specifically included as per requirement of this section. Therefore, land and building, the words and rights therein have been clearly understood and treated as independent from each other. So provisions of 50C are deeming provision, and all of you know deeming provision should be, it is a settled law that deeming provision should be strictly construed. Therefore, interpreting deeming provisions, while interpreting the deeming provision, neither any words can be added nor deleted from the statute. Okay? We should apply the rule of strict interpretation as well as rule of literal construction while understanding the meaning and scope of deeming provision. Now, so 50C we discussed, not applicable to tenancy rights, leasehold rights, booking rights, etc. Why? 50C covers only capital asset, being land or building or both. It will not cover any transfer of leasehold rights in land and building. Next. Recently, 18 June 24 itself, Shivdeep Tyagi, Delhi Tribunal, 50C not invocable for leasehold rights, apply to capital assets, follows Noida Cyber Park. Recently, this is Tax Sutra reported in judgment, Delhi Tribunal, in Shivdeep Tyagi on 18th June 24. Next. Supreme Court has long back held in Amarchand and Shroff. Supreme Court, 48 ITR 59, deeming provision cannot be extended beyond the purpose for which it is enacted. Again, Supreme Court has held in case of Mother India refrigeration. Supreme Court again, 155 ITR 711. Legal fictions are created only for some definite purpose, and these must be limited to that purpose, should not be extended beyond their legitimate field. If the capital asset under transfer cannot be described as land or building or both, then please do not apply 50C of the Act. Move forward, sir. But there are some contrary views also. 50C are applicable to transfer of leasehold rights in Bombay High Court, Rajasthan High Court, Lucknow Tribunal, etc. Move forward. 50C cannot be applied to stock in trade. You know that very well. Now 43CA applies now. 43C applies to stock in trade, not 50C. Very interesting, sir. Exemption under 54, 54F, 54EC, 50C. Now take that Chetan's case only. I entered into sale agreement and sale deed, etc. Suppose, 50C value is 2 crores. I received only 1.5 crores actual sale consideration. And I purchased a house. So law is telling for purpose of 50C, you please take 2 crores. 50C when you compute, take 2 crores. When you compute 54, 54F, 54EC, you please take only actual sale consideration. So for 50C, you take actual, you take the stamp duty value in 2 crores. While computing 54, 54F, 54EC, etc., please consider only the actual sale consideration. Consider and give relief accordingly, because law is telling you cannot ask the assessee to do the impossible. How much you received? Only 1.5 crores. When you received 1.5 crores as per the sale deed, just because deeming provision is telling that guideline value is 2 crores, you cannot apply 2 crores towards purchase of property or for 54F. Law is telling impossibility. You cannot ask the assessee to do the impossible. When you have received 1.5 crores, to that extent only the assessee can invest. He cannot invest 2 crores. When he has not received 2 crores, he has received only 1.5 crores itself. Therefore, the law is telling in this case, take Sunil Miglani's case. While computing exemption at 54F, actual sale consideration received was to be taken into account and not stamp duty valuation under 50C. Sunil Miglani, 2020, 115 taxman.com, 91 Delhi Tribunal. Similarly, host of judgments are there. Lucknow Tribunal, Anant Chetan Agarwal, 97 taxman.com, 621. So what is the court telling? Assessee cannot be expected to do more than whatever he has actually received. Meaning thereby, assessee can invest only that amount which he has physically received from transfer of long-term capital asset other than a residential house as provided in section 54F. There is a doctrine of impossibility of performance wherein it is only to the extent of the funds available with the assessee that he can be expected to invest. This view has been adopted by various judicial pronouncements, like in the case of National Aviation Company of India versus DCIT, 2011, 137 TTJ 662 by Mumbai Bench of Tribunal, and Jagdish Malpani's case by again Indore Bench of Tribunal. Therefore, court is very beautifully analyzing the provision. They are telling on perusal of 54F what is therefore relevant investment of net consideration in respect of original asset which has been transferred, and whether net consideration is fully invested in the new asset. Whereas the net consideration as determined under 50C is based on stamp duty valuation authority, is not a consideration which has been received or has been accrued to the assessee for purpose of 54F. It is therefore clear that the entire net consideration and whatever has physically received and accrued to the assessee, entire amount has been invested, and in such circumstances, provisions of 54F1A are complied with by the assessee, and therefore assessee becomes eligible for deduction in respect of whole of the capital gain to be computed in 45 read with 48 and 54(1)(a) of the Act. Host of other judicial pronouncements are there, Sabita Devi Agarwal, etc., etc. Gaudi Mahadevappa, Bangalore Tribunal. Now, this is again 50C read with 54, same thing, Nandlal Sharma, Delhi High Court. This is, Nandlal Sharma Tribunal, Jodhpur. Move forward. 50C read with 54C, Neela Visha, same thing. Now, retrospective application of tolerance band of 10% to section 50C. Why the safe harbor limit of 10% should be retrospective? Please understand, my dear friends. This provision of the tolerance band of 5% and 10% and 20%, from when did it come, sir? Just go back and I will tell you from when it came. Tolerance band, very, very interesting issue. Sir, the tolerance band, when it came, if you see the section, just to take you there, please utilize this case law also, as well as the section also. Sir, the third proviso says the tolerance band was inserted by Finance Act of 18 with effect from 1st April 19. Okay? With effect from 1st April 19. So what was 5 has now become 10, 110% of actual sale consideration. Understand Finance Act 19 with effect from 1st April 19. Now come to the case law. For example, I were enter into a sale deed with Mr. Kamlesh. Sale deed executed in 1/4/15. This section applicable from assessment year 1920. I entered into sale deed with Kamlesh for sale of property because this 50C, and then I sold a property which was 1 crore and consideration received was only 90 lakhs. Actual consideration received is 90 lakhs, whereas the sale deed stamp duty guideline was 1 crore. Even for this year, which is assessment year 15-16, even though this provision is applicable, made applicable from 1st of April 18 with effect from 1920, there are case laws, they are telling this tolerance band or the safe harbor limit of 10% or tolerance band of 10%, that is 110% of actual sale consideration, because 90 lakhs and 1 crore less than 10%, you apply retrospectively. There are case laws which I am going to give you, they are telling from when, sir, when to apply retrospectively. How beautifully the court, the tribunal is telling, they are telling you apply it from when this section was introduced in the statute. Although this proviso is introduced with effect from 1920 assessment year, the case laws are telling, because this is curative in nature. This is what? This is curative in nature, and this is for mitigating undue hardship. Therefore, this provision should be given a reasonable and equitable construction, and it has to be made effect retrospectively from when? From the date 50C was introduced, 1st April 2002, that is assessment year 3-4 onwards itself. Whereas this provision was made available in the statute from assessment year 18-19 with effect from 1st of April 18. Sir, law prospicit, non-respicit. That means what? Law is always presumed to be prospective and not retrospective. But because this is what? This is a curable. This is for mitigating undue hardship. So, sections are telling, rather the case laws are telling, the judicial case laws decisions, they are telling, please give a reasonable, equitable construction so that this amendment, which is for curing, for the hardship, for removing hardship, please consider to be in retrospective in nature so as to make the provisions workable and rule of beneficial construction should apply. Please remember, there are 3 Supreme Court judgments which says Supreme Court judgments have followed reasonable construction instead of strict interpretation in the following cases. Now, Finance Act 18, I told you, with effect from 1st April 19, inserted 3rd proviso 50C, which provides tolerance band of 5%. Limit of 5% increased to 10% by Finance Act 20, with effect from 1st April 20. Question arises whether retrospective or it is prospective. Joseph Mudalian, 14/9/21, pronouncement by Mumbai Tribunal. They are telling will be applicable with effect from the date the section was introduced, 1/4/2003. That is assessment year 3-4 onwards. Sandeep Patil, Bangalore bench. Maria Fernandez Sharil, Mumbai bench. Mamta Divakar Shetty, Amrapali Cinemas, Delhi Tribunal, etc., etc. Sandeep Patil, take our Bangalore bench. So Bangalore bench is telling difference in stamp duty valuation, actual sales consideration should be ignored if it's less than 10% or 10%. Even though the said provision came into effect from 1st April 19 or 1st April 21. 1st April 19, 5%. 1st April 21, 10%. We notice that the Calcutta bench of tribunal has held it to be curative in nature. In the case of Chandra Prakash Junjunwala, accordingly, that proviso shall apply since the date of insertion of 50C. Accordingly, the above said reasoning given by Calcutta bench of ITAT also supports the contention of the SSC. Similarly, sir, Maria Fernandez Sharil, again, that is by ITAT Mumbai. Same thing. So all these are there. Mamta Divakar Shetty either. Then Amrapali Cinemas. Fine, sir. Now, any point, sir? Any doubt till now? Any question? Any question, sir? As of date? As of now? So last, time is reaching 7. Last 5 minutes we'll do and we'll stop and we'll continue in the next session. Now, one more issue, sir. Next issue. 50C does not apply when immovable properties are compulsorily acquired by government. So, immovable properties are compulsorily acquired by government. So, they are telling where is the question to disbelieve? This is not a transaction between two private parties. When the government themselves is compulsory acquiring the property, how can you apply 50C? For example, there is a property in Shimoga and it is compulsory acquired by government. Shimoga now they say the guideline value is 2 crores. Government is telling I'll give you only 50 lakhs. So assessee will only pay capital gain on 50 lakhs only because they are telling you cannot disbelieve the government. You cannot disbelieve the government. The government themselves has acquired this property. So this is held by PCIT versus Durgapur Projects, Calcutta High Court, and Honorable Justice Shivanagam and Honorable Justice Hiranmay Bhattacharya, delivered on 24th February 23. Durgapur Projects, Calcutta High Court. So the issue therefore is the department selling 50C can I apply when immovable property is acquired, compulsory acquired by government? Whether you can apply the definition of transferred and 247 can be considered for applying 50C or only when the transfer involves payment of stamp duty that the provisions of 50C come into play. So when property is acquired by government, nobody pays stamp duty. Okay. So Division Bench of Calcutta High Court, considering the claim, said that when the land in question was acquired by government and compensation was given, there is no question of paying a stamp duty payable. Why? Government, why should they pay stamp duty when they compulsory acquired the property? When there is no stamp duty, they are telling you cannot take the stamp duty guideline value. Also, the court noted that, very important point, this is not a case of transaction between two private parties where there can be room to suspect. So, there is no question of any room to suspect. Therefore, you cannot apply provisions of 50C to a case wherein immovable property is compulsorily acquired by the government. Fine, sir. We'll stop here and continue in the next session. Say on Thursday, I think. Thursday. Any questions, sir, till now? If you have any question,